Yo, what's good? Let me just pull this. Oh my god, my bad. Alrighty, so, fuck, my bad. Sorry. So, welcome back to a stream. Alright, so you can see that these lows were swept, and we see this manipulation and distribution like right here. So you see there was I was supposed to entry over here, but then we went and hit stop loss because it was sweeping liquidity, right? I was so stupid right here. I actually thought this was gonna go like higher, knowing damn well it didn't sweep liquidity properly. That was the worst mistake on my end, right? But it's okay. So it hit this stop loss and then it went hit this stop loss and then it went like swept liquidity and it went higher. It's okay. I'm gonna blow this account for sure, and then next one get better because I'm journaling. Yes, sir. Journaling. Oh fuck, my bad. Sorry. Yeah, so you see over here. So you see this is the whole concept of resisting liquidity and trendline liquidity, range in liquidity. If we have ranges, of course, we have a bit of a range in liquidity. So we're basically like going from tippity top to tippity bottom. So like basically we're taking out the lows and then we're moving to the high, take that out, probably pull back towards this fair value gap and then go higher. So right now it doesn't seem like it's pulled in back, but if it does pull back over here, we can still go for a buy. Low key, high key, key. Do you love me? Are you riding? Say you never ever leave from beside me. We have 1 to 3 over here, so we still can like wait for if price does like sort of retest this level. We can go for a 1 to 3, yeah, almost 1 to 3. So we can just go for this trade right here. So I'm expecting price to sort of retest this level and retrace higher from here. So I'm expecting this, maybe a bit of a, and then go here. Let's see how it plays out. Let's see what divergence is saying. Seems like we're a bit bullish. I mean bearish, my bad. What am I saying? But we're overall bullish, right? So seems like we're starting to break structure towards the upside because we see this order flow over here. But we need to ideally see price going higher from here. But see, we have a sweep, pullback, and then we have this order flow. So we're ideally wanting to see something like this form again, and then go towards these highs. Let's see if there's anything else on the left. So if there's any big major price drop, I'm expecting a reaction at this unmitigated fair value gap. So that's the only thing that I can really see here of the 15-minute chart. But I'm expecting price to have a pullback. So as you can see, like right now we're bullish. So we're probably going to pull back to this fair value gap because that's the type of momentum that I'm seeing here. Let's see if there's any other fair value gaps on the on US 30. Seems like we have a mitigated fair value gap over here. So I can't really consider this anymore because it's mitigated. Okay, so we have this, which was unmitigated, but now it seems like we're mitigating it. We're probably going to close higher and then use this as a level support to sort of retrace higher towards the liquidity draws. It's pretty simple if you think about it. Let's go back to NASDAQ. Okay, so I'm expecting price to pull back here and then take this trade. If I lose this trade, I'm gonna blow this account. Swear to God. Fuck. What's going on with my chart? Because here's the thing, right? SMT, I mean, a divergence really proves the point that this will like sort of feels like we're going towards. I don't know, this price action is not really convincing. Oh fuck, my bad. Let's see. Okay, so we see a let me note this down even on my these were all like paper trades, so now this is basically where I forgot to like journal properly for my funded challenge phase 1 2k funded challenge. So I gotta make sure I journal every single trade so that way I can like reflect, because these were all just paper trades. So sorry, my bad. Give me a second. Okay, I'm confused with my own thing. What's going on here? Okay, this is the tab. So let me just close this. Oh wait, I was here. Sorry, my bad. Okay, so this is my backtesting sort of journal where I have my strategy and everything. It's over here. See? So we have everything that I have over here. So I'm trying to build like a proper strategy, but for now I'm just basically looking for manipulation and a distribution and to get in when price is in discount. But this fair value gap seems like it's right below equilibrium, so technically it's still discount, so that's why I'm waiting for this to entry over here and then take this towards this buy-side liquidity draw. So let's see how this plays out, because price seems to be reacting to this fair value gap, so now it's wicked into. I mean, this was mitigated, so it's not really valid at this point. But yeah, so I want price to sort of pull back to this area and then go higher, higher from here. So I'm expecting a reaction over here and then retrace higher towards the buy-side liquidity draw. So let's see how it plays out. But we do have red folder news today at 6:45 my time, which is 9:45 AM New York time. So I am expecting some sort of red folder. It's actually orange folder, so it's not as bad, but ideally we would want to wait for this to finish, this malarkey. United States Federal Reserve Waller speaks. Okay, maybe I could watch the live stream as to what's going on with the economy. It's kind of interesting. So let's see. FOMC voting member dissent. Okay. Because I gotta watch out for FOMC. What was it? Monetary NFP, and what was the other one? I forgot the name of the other one. Those are the three types of news that I gotta look out for. So you see over here we have where was it? I forgot where it was, to be honest. I have no idea where it was, to be honest. It's sort of I guess it just ran away. I don't know.
It doesn't matter as much. These are the two
Okay, so we see this liquidity swept
swing
slightly.
points that we need to pay attention to. Here and here. Technically speaking, that's what we need to pay attention to, right? But given the fact that these two candles here were filled with such momentum, it would certainly pique my interest and tell me that this was potentially a liquidity grab for a bearish reversal here. Let me play price forward a bit.
Right.
This would have been the first trading opportunity, but it would be very, very risky. So let me drag out this arrow tool a bit more, and you can see that price pierced past that low. But again, this is not
It's an extreme premium though. So in this type of situation, because we're below equilibrium and still discount, so I'm looking to entry over here and then take this trade all the way towards the swing high. So in the next, probably in like an hour after, because 6:45 is when news is gonna unfold, 6:45 p.m. So I want to wait until ideally about 7:30 my time, because news is gonna unfold, and I want to wait until it's like post news, to be honest. Not trying to take no trades during news. Even if it's orange, I don't want to really do anything, because it's not as bad impact, but you know, ideally I would stay away from the market. This is the type of momentum that I'm expecting. Go higher from here. So it's gonna, it does make sense, because it's probably gonna align with the time, you know. Sort of takes this liquidity and then goes higher. So what am I drawing? Goes higher from here, and then it keeps retracing towards the buy-side liquidity draw. So it makes sense. It makes sense. So we're sweeping liquidity. See over here, we're sweeping this liquidity, and then we're gonna come down. Use this fair value gap because it's unmitigated, right? In other words, it's not wicked into. It's this fair value gap, and then you go higher. Pretty simple stuff.
a clear breakout structure. This could also be looked at as a liquidity grab. So trading this range here, dragging the fib tool from here to here and going short, I guess it would technically be valid, but it would be extremely risky. So this is not something that I would get involved in. Let me play price forward a bit more. As you can see, obviously would have worked out. We did push to the downside. But again, this is not a trade that I would recommend taking, and it's not one that I personally took. This would be extremely risky. However, if we now look at current price action, we can clearly see that this bearish movement is pretty much confirmed now, right? This is a clear breakout structure. Let's delete this arrow tool now. So we can start to see now that the market has been reversing. We had a liquidity grab up here, and although the shift in structure was a bit subjective at first, after this retracement back to the upside, we have another push to the downside, and now it's very clear, and I can confidently say that my short bias here is now confirmed. There was another opportunity here, swing high to swing low, extend that fib tool out. That's a perfect continuation trade right there. I know my structure indicator didn't identify that as a high, but if I adjusted my settings a little bit, it would. I have my indicator set to show me the most extreme swing points. If I wanted to focus on more my side, we have another push to the downside, and now it's very clear, and I can confidently say that my short bias here is now confirmed. There was another opportunity here, swing high to swing low, extend that fib tool out. That's a perfect continuation trade right there. I know my structure indicator didn't identify that as a high, but if I adjusted my settings a little bit, it would. I have my indicator set to show me the most extreme swing points. If I wanted to focus on more minute swing points, it would certainly show that. But that is a valid trading opportunity right there, a short continuation trade. However, I did not get involved in that either. So let me play price forward a bit more, and we'll start to discuss how and when I got involved. This was my short trade right here. This was the idea. I'm going to annotate another breakout structure right here. That swing low was clearly violated to the downside. And again, this is just simple continuation structure. I'm looking for bearish continuation to the downside to take out this low right here. The main point of showing you this example is to say that a liquidity grab, it's not really necessary to identify before each and every single trading opportunity. As you can see, there was 1, 2, and now 3 entry opportunities within this bearish price action here. Neither of them had a liquidity grab as a confirmation prior to the entry points, except maybe the first one here, because this was the initial liquidity grab, right? But that was very subjective and extremely risky. All the continuation trades following that did not need that liquidity grab as confirmation, because the liquidity grab is simply to tell us that we're hopefully trading on the right side of the market. It's just an added confluence to give us more confidence in our trading decisions. So the fact that the liquidity grab was identified right up here, that tells us it's safe to enter bearish continuation trades. So we don't have to see a liquidity grab such as this before each and every entry opportunity. That's unnecessary. You could trade that way, but I can almost guarantee you're not going to be trading much, because a clear liquidity grab doesn't occur before each and every single trading opportunity. Unless, of course, you go down to smaller time frames, but then we're entering a different kind of strategy. If we're talking about my very specific 4-hour swing strategy, you don't need to see a liquidity grab before each and every continuation opportunity. It would, of course, be ideal, and when it does present itself, that's great. It adds even more confidence to the trading idea, but it's not 100% necessary. However, just to solidify this point, when you're trading a potential reversal, it is absolutely 100% necessary to identify where liquidity has been purged, okay? Because that adds validity to our bias in the market. This short bias would be extremely risky if I hadn't seen this liquidity grab first. Now let me remove replay mode. You can see where price is currently at. Again, this is not ideal. I have no expectations for this trade anymore.
Yeah, so we expect price to drop towards this fair value gap and then retrace higher from there. Because we didn't wick into this, so it's unmitigated, so that's confirmation. We have a fair value gap below this, which is a extreme level of support. So I'm expecting price to take this out once again and then sweep liquidity and then all together go down towards the this extreme low. That's like a 25. 1 to 25, that's crazy. No. Gotta be out of your fucking mind if you think that's actually a trade. Okay, 1 to 5, that makes more sense. That makes way more sense. Even 1 to 7.6, that's not that bad. But it's probably gonna get victim into on this run. So I'm expecting price to do. I'm expecting price to come down to this and then go higher from there. So order block, also known as supply or demand zones, represent a significant area on the price chart where what is identified during a downward price movement and the area where the last bearish candle before a substantial upward price movement. Before a substantial upward price movement occurs. This indicates that institutional buyers are stepping in, absorbing sell orders, and preparing to push higher. Traders eyeing bullish, Traders eyeing bullish order blocks anticipate these areas as potential points of interest where price may find support, suffering a strategic entry point for long positions. Interesting. Okay, let me think. So we gotta retrace down towards this fair value gap and then go higher from there, but there's a big problem. Right, zones are yeah, that's right. This is the opposite pretty much. Impulse move that breaks a nearby high. But order blocks can also be like potential like spots where inducement happens, because there's going to be a bunch of liquidity sweeps right below, so you can't really like consider order block entries. I never understand anyone who entries off an order block, to be honest. Just doesn't make sense to me. I don't know. When a market approaches the supply or demand zone, the likelihood of a reaction, whether it's a continuation or reversal of the trend, increases because the level or these levels are when the institutional traders have previously shown interest, either by initiating large positions or placing their hands, right? So this is kind of bogus because not every order block is going to be like valid. Like this is the price reacts from the last downward move before the improve what? So this is a reclaimed order block, isn't it? because this is technically what they consider an order block. I thought it was an engulfing from like a demand on supply. Some traders may prefer to just mark the entire range for potential. Entire range, okay. So they're marking it as an entire range, I thought. Traders can often start by analyzing order blocks typically they have found in the form of consolidation for let's see what price says. See what the fuck price says, man. It's gonna drop for sure. But I won't really expect price to sort of say anything during I mean either way, even if price continues to drop, I really doubt it would like sort of fuck it up like that. Because it's an orange for the news day. Worst case scenario, I learned something, so where the fuck is the where the fuck is the body, sir? Where is it? It's over here. The price is starting to drop. Let's see what it does. Where's the fair value gap? It's right here. Okay. Sorry, my bad. Where the fuck? Okay. It's supposed to be like over here. This is the unmitigated fair value gap. And if we use this as the stop loss, swing low, and this is my take profit. Make $16. Yes, sir. 16 motherfucking dollars, bro. That is crazy, man. That is fucking insane. Yeah, so I would put this and I wouldn't give a fuck afterwards. Because I want to see how price plays out. So I want to really just put it on as a pending order. And it would start here and then take it up here. I'm gonna just put like a limit order here, honestly. Let's go for, what's the zone called again? It's a 19526. 526. I usually adjust the pips like afterwards, to be honest. So the pips, I usually adjust it afterwards. Of course, you trigger me in like way fucking above my buy limit. That's crazy. So it's below here, and TP on the other hand is up here. So it's like a pretty good risk to reward ratio, honestly. So as soon as we hit this buy limit, we're gonna get triggered in to the trade. Seems like it's using this, but it's premium, so I don't want to entry there. Fuck no. Fuck no, man. I'm not trying to entry over there because it's premium. I'm gonna get liquidated. I'm not trying to be liquidated, man. Fuck. Not trying to be liquidated, man. You know what I mean? One second. Give me a second, guys. What the fuck is that? See how price action plays out. Breakout trading? What the fuck is breakout trading? I'm just watching like someone. That's wild. Hold up. I have an idea. Give me 1 second. Yeah, so I have an idea. So what I'm gonna do over here is wait for price to push back towards this fair value gap because it's unmitigated, so it's probably gonna use this as a support level and entry right there. So my buy order is over here at this exact rate, which is where the fuck is it? So 509. But it's a little different on my Maven bullshit. So it's like somewhere around here. It's like a 523 according to this. Am I getting scammed, chat? I don't fucking know, but I don't care. You know why? Because I got a big boner. My bad. I shouldn't have said that. Because I'm confident. My bad. That's what I was supposed to say. I don't know. I just get a little weird sometimes. Anyways, so you see this liquidity must be swept. So this is just nothing but a fake out. So that's why it's refusing to push above. This is just a liquidity sweep. See? This bitch boy wants to fucking sweep the liquidity, come back towards this unmitigated fair value gap. This dog shitty ass fucking fair value gap that you see over here, it's already wicked into, so you don't want to get fooled by this bullshit. I'm tired of seeing all this nonsense happen in the market over and over, and people still keep falling for this. This fucking mitigated fair value gap with all these wicks in this. If this shit is attacking your fair value gap, you better like think of it like this, right? This fair value gap over here is your bitch, alright? This is your bitch. And then some guy, okay? Some guy with a BBC, alright, 8 inches, 12, 15, 17 inch big black dick starts attacking your bitch right here. And he's your friend, alright? You obviously want to get rid of this guy, right? So that's exactly what I'm saying. That's what a mitigated versus unmitigated fair value gap is. A mitigated scenario is when you don't have a friend who has a big black BBC, okay? And if you do have a friend that's gonna do sort of, I don't know, whatever, that's basically an unmitigated fair value gap. I think that's a good explanation because most people, especially my generation, has brain rot. So if I try explaining something in a logical perspective, you will fucking forget that shit in 20 seconds. Because who gives a fuck about wicked into and then unmitigated fair value gap? So it's probably not going to be used for the next 20 years. That's bullshit. You know, it's fucking bullshit. What does make sense though is if someone said, "This is the Demarcus over here trying to dig down your hole," all right, and then it gets dig down, so then you want to get rid of Demarcus for the rest of your life, right? That's exactly how I define a mitigated versus unmitigated fair value gap. Something that's digged into is basically a mitigated fair value gap. Something that's not is an unmitigated fair value gap. So in this case, you want to use these as your friends, and this could be, once it's digged down, that's when it's invalidated, basically. I hope that makes more sense. Alright, so anyways, we wait for this price action to push back. I have my order triggered in, so I don't really give a fuck about when it's gonna happen. And I don't give a fuck about losing this 10 bucks to make 30 bucks back. So fuck that. Okay, so let's wait for this price action. Sort of, it seems like it's breaking structure towards the upside. I don't really like this price action, to be honest. Let me look for a gold trade in the meantime. I'm not trying to sit here like sit on my ass, low-key. Let's see what's going on with gold. Seems like we have a pretty good price action chart over here. We're breaking structure towards the upside. We have a manipulation above these highs. So it seems like we will in fact manipulate liquidity and then come down towards, like, in the next few days we're probably gonna come down towards this fair value gap, which is basically a distribution leg. Even invalidate this fair value gap and then go higher from there, because we need to sweep this liquidity. Actually, no, it won't go higher from there. I'm retarded. It's going to use this fair value gap as an inverse to sort of retest this price range. That was a fucking retarded ass drawing. And this is an unmitigated fair value gap, so it's probably going to use this as a level of interest, you know? Tap back into this because it needs to distribute as well. So it's going to manipulate this, and then it's going to distribute because it needs to sweep this liquidity, and then, you know, have a distribution like fucking jacuzzi in here. And there's a bunch of mitigated fair value. This fair value gap is completely mitigated. You see this is unmitigated, so it's going to tap back towards this and then go higher from there. That's what price is going to do for the next few days. I'm going to go to the 4-hour fair value gaps, see if there's any. Okay, this is already mitigated into, so I can't really use this bullshit. But I will use. Let's see what sort of reaction happens over here. Because these highs have been swept, as you can see. So these highs have been swept. So it's gonna probably, let's expect for a price reaction at this point. But I'm expecting to short until then. Seems like we're sweeping liquidity. I think we might do two things here, right? Once we close above this inter-term low, right? We're probably going to use some sort of fair value gap that forms unmitigated, ideally. No, ideally, you need an unmitigated fair value gap. What am I saying? All right, so let's go for this. Let's say the fair value gap forms somewhere here, hypothetically. All right. So let's use this as my stop loss and this as my take profit. It's not worth it. I'm not gonna give a fuck about this trade. Fuck that. It's not worth it, you know. It's not worth it. Why would the fuck? Why in the right mind would I even consider taking this trade? It's like barely a 1-to-1. Bitch, I'm not trying to fucking scalp. So let's go for this trade if it uses this as a point of interest. Seems like it's displacing towards the downside. Because we have a fair value area that's formed over here, but there's no other fair value area. So yeah, there's a high likelihood that it's going to continue lower towards this 4-hour fair value gap. But I'm not trying to take no chances here. Because it's going to sweep this liquidity by going to this and then going higher from there. If I could find a good buy after I'm confident with the proper market structure shift somewhere here, then I will 100% go for it. Because that's it. It's over here, and that the TP is somewhere here. I get a proper 1 to 2.5. That's a great trade, but that's just predicting. Okay, let's look at Euro USD. I've never traded Forex. Maybe I should. Let's see. Seems like we're sweeping liquidity. Yeah. We're for sure sweeping liquidity. See all this? See all this junk? This was the swing that's swept so far. Seems like it's going higher. I don't know where it will like, because it swept these highs as well, right? So it might as well just keep pushing towards this point on the daily. I think it's gonna keep going higher. It's already mitigated. Seems like it's respecting this price range as well. Yeah, it's already like sort of tapped into it. It's using this as a level of support. So it seems like we have a daily bullish daily bias. Let's go to the weekly. On the weekly, 4-hour. So you see we have swept. We haven't swept liquidity yet. So I'm not trying to take no trade. Actually, I might take a trade. If it displaces here, I will take a trade going higher, right? So this is the 4-hour. And I will take a trade somewhere like as soon as it displaces higher from maybe like a swing low that I see here towards the swing high. Oh, yeah, swing high, this is fine. See what's going on. But I need price sort of push down, because it's sort of temporarily pulling back. So you see this. This is just an inter-term high, but this was swept. So I need price to sort of keep going and use this as a level of support, right? Because this fair value gap is not wicked into whatsoever. This is already, this is not even a fair value gap. I'm retarded. Sometimes I wonder, like, if I'm actually like missing a few chromosomes or some shit. See, like, if you push down to this fair value gap, the 4-hour, you can sort of take it, let's say, once it shows a clear market structure shift, I would take it from around here to this point. If I can get like a 1 to 4, that would be ideal. Yeah, overall, we are breaking structure towards the downside. These are just temporary sweeps. We are bearish, extremely bearish, in fact. So we're probably gonna test price. This is testing this unmitigated fair. Oh, wait, we wicked into it. See? Nope. Can't do that. This is already wicked into as well. So it seems like we're going lower from each of these fair value gaps. We're going lower, 100%. We're just like wicked into it and then we go lower. But I'm expecting price to sort of push towards this. But in the meantime, I can actually look for a few opportunities. Because it swept these highs, right? It swept these highs, which means I can look for a short position. I still have a pretty good close here, but I will push high lower. Because it needs to like push here. So I'm gonna take a trade off this is already mitigated, so I can't really take a trade off this. If like a proper fair value gap forms, I will take a trade off that. Because these are mitigated already. Unmitigated, any unmitigated. See, these are wicked into. So I need something that sort of takes the price lower. See, this is already wicked into as well, see? It's wicked into. Parallelly. Yes, sir. Anyways, in the meantime, let's watch this liquidity concept.
We'll see what happens with this trade. I might get stopped out.
Yeah, I gotta turn on my headset. Give me a
I
second.
might win. I don't know. We'll see what happens next week.
I cannot take any trade right now, though. It's pre-market for options. I'm not trying to trade options, Loki. I hate fucking options markets. Seems to be like a 4-hour fair value gap. Yeah. Do you feel like a fair value gap? But thinking like short from here to like. I'm about to go. Oh my god. Oh my god. Let's see how this plays out. Pretty sure it's gonna TP. Options are easy. Now that I think about it. The fuck is this? Oh, this is this is a trade that I took from somewhere. I don't need such a ridiculously fucking huge fucking risk to reward. See, it exactly played out the way I anticipated it to. But I was just too pussy to take this trade. I was too pussy. I gotta stop doing that shit. See? It's almost at TP. So, look. Because I remember, like, I was like, wait. 1 to 3.5? That's not that bad. It's not good, but it's not that bad. Honestly, I would have probably closed somewhere around here. As long as I have a 1 to 2, I don't give a fuck. Because it's taking way too long. Hurry up, chat. Okay, so let's look for... Divergence overall is saying we are going higher. Yippee! I can't wait to die. Yay! Seems like we're using this fair value gap. Oh fuck. Man, that's annoying. So we're probably not gonna get a trade today, honestly. 6:45. Now we're in news. Yep. We're in news. Let me get a screenshot of this.
Hey traders, and welcome to another episode of Smart Risk. Trading without the skill to identify valid and high-quality order blocks can be extremely risky and may result in significant losses. Order blocks, often overlooked by many, play a pivotal role in executing well-informed trading opportunities and are a cornerstone in the strategies of smart money traders. However, many traders deep into the details of the order blocks and see what is the exact definition of the order block. In the bearish scenario, order block refers to the zone corresponding to the last bullish candle before a sharp and substantial downward movement that generates a valid break of structure. Similarly, in the bullish scenario, it refers to the area corresponding to the last bearish candle before a sharp and substantial upside movement that forms a valid bullish break of structure.
So wait, but these are all engulfings. Like I mean, like demand, supply, and demand, like engulfing candles. That's what I was considering order blocks all this time. Are order blocks bearish and bullish reversal engulfings at discount slash premium zones. Let's see. Bro, why is my shit lagging? Hold up. What's going on? It's not working. It's
Now,
okay.
let's see what is the psychology behind these zones in the market.
Psychology. I
The
can't
theory
tell.
behind considering these zones as potential reversal areas is based on the belief that they represent manipulation areas formed just before a significant market movement. Traders view these zones as areas where a large number of buy or sell orders have been executed. Therefore, by using these zones in our trading strategy,
Yeah, so it's basically supply on demand with like an engulfing. That's what I'm seeing here, but my fucking GPT is not working. Give me a sec. Let me use Claude. Am I retarded?
we can potentially take advantage of the high probability of price reversal and change in direction when it reaches these areas. Now let's proceed to the next topic and discuss how to identify a valid order block in terms of candlestick patterns and see the various scenarios that we might encounter in identifying candlestick-based order blocks on the chart. In a bullish scenario, a candlestick-based order block refers to the last selling candle before the price starts pushing upward drastically. This candle typically breaks below or effectively sweeps the liquidity of the lowest point of the previous candle. For example, in the bullish diagram, we identify
So these are basically
this candle typically breaks below or effectively sweeps the liquidity of the lowest point of the previous candle. For example,
yeah. So it's basically sweeping. Oh, this guy's talking about a higher time frame bias, bro. Oh my god, that's what this was. So basically, what he's saying is he never mentions that bullshit. Like over here, you see, like this is a manipulation, right? This is a manipulation. These wicks are manipulation wicks, right? But here's the problem, okay? He doesn't talk about how this is in the higher time frame. That's what confused me from the start. For example, this is not an engulfing, but you get the point. Like this is an engulfing right here, so you can use this as an order block, right? But he never mentions that shit, you know, because you can use this as like an extreme supply level. So you see how like we swept liquidity, like so we swept liquidity from like this liquidity sweep was present. So he never speaks about that. He was like, oh, but it could be some sort of see, this liquidity swept. That's what this does. That's why it's an order block. He uses this to sort of, in fact, it's this one. So it's supposed to be like something that sweeps liquidity, sort of push it in the inverse direction. That's what I'm getting here.
in the bullish diagram, we identify this red candle as a valid order block. It serves as the last bearish candle before the price initiates a drastic upward movement, having taken out the lowest point of the previous bearish candle and effectively swept its liquidity.
I can't help it. I can't help but see this every single time in every scenario I see this. I can't help it. It's like voices in my head. Like I'm expecting price to sort of go higher, tap back into this unmitigated fair value gap and go higher. I just can't stop seeing that shit, bro. Like I see the manipulation, right? This sweep, manipulation, total sweep, punani, whatever you want to call it. And then you see this distribution, accumulation, accumulation, manipulation, distribution. We have this unmitigated fair value gap. Price taps back into it, boom, goes towards whatever the height, like whatever the drawn liquidity is, right side liquidity in this case. Let's say.
Similarly, in a bearish scenario, a candlestick based
See, this is sweeping liquidity. Yo, what's up, man? I think I've seen you before in my chat.
order block refers to the last
It's been a
buy
while, I think. How are you? How are you doing? Nothing much. Just
candle before the
doing.
price starts pushing
Trying
downside.
to pass my phone to chat still. I was having a bit of like problems, I guess. Then yeah, that's why I'm now focused on backtesting,
Drastically.
becoming
This
better.
candle typically breaks above or effectively sweeps
It's
the liquidity
sweeping. See, accumulation, manipulation,
of the highest
distribution,
point of the previous candle.
fair value gap. It's basically I'm expecting.
Now,
Right.
let's move into essential criteria and rules that we need to consider to identify valid order blocks in the market and understand.
I don't know why, but order block entries low-key feel very, very like scary to me. Like I always find comfort in using a fair value gap. That yeah, been in chat. Yeah, exactly. I remember your name. For some reason, order block entries just I'm scared of order block entries.
Understand how we can use them to our advantage.
Plus, it's in use right now, isn't it? Where is it? I also want to see if it's news right now, but it's the AM session. as far as sweeps go. You see London took out the lows. Now we should take out the highs with the New York aim. This MC, but I think you follow ICT. Yeah. Order block is always amazing, but if you find good order block, not inducement, exactly, yeah. Because you could sometimes like get caught up in like a certain spot like this. Learn everything from the Smart Risk channel. Yeah, honestly, even I learned most of my like early,
It's crucial
like first month, second month
to note that to
stuff
have a
from
confirmed and
here,
valid order block. Firstly,
like from one specific playlist.
price must take out and sweep the liquidity above or below the previous candle to form a valid order block.
So this is not, yeah, exactly. Liquidity is not swept. Manipulation. Oops, where is it?
To have a confirmed and
Manipulation, accumulation, manipulation, distribution, unmitigated fair value gap. Maybe if price taps back into this, you can use it as an entry. Target this as your stop loss towards
valid order
drawn.
block. Firstly,
So it seems like we took out the lows with London. So expecting New York to take out the highs. Because there's an unmitigated fair value gap here. So I'm expecting, however, actual like high order over here. Like pending at this fair value gap. Because it's an unmitigated fair value gap, right? Plus like there's a few other confluences as to why this might hit TP right there. Let's see. Because right now trading is bad, I think, because it's, you know, it's a orange for the news day, but I don't know. Let's see. How much have you grown your account? I haven't. I actually like I was unprofitable because I don't know, I lost some money on this account. It's okay. It is what it is, man. I'm trying to pass this challenge, so I'm risking $10 for like $32, so that's okay. I went down to like this, so that's bad. Market is raging, yeah. It's taking out these, and then took out these, so now I'm expecting price to sort of take this and then go higher. Because it swept this liquidity and it's using this unmitigated fair value gap, that's where I entered, and then go towards this. I know it's, you gotta make mistakes to learn, right? So it's okay, even if I blow a few accounts, that's fine, we learn. Gotta make sure I put that on my, not this one, I gotta put it on my other, this one right here. So I will document this on my, why is my buy limit not triggered here? For some reason my buy limit's not triggered here whatsoever. I put this because of auto flow, so I'm using this like 1, 2, 3 combination. So I've used this swing low as my stop loss. I don't want to like drag it too further either. So this is, I think it's okay to trade during orange. I feel headache, yeah. When the market's like this, stop trading and stuff. Start using YouTube, maybe due to spread. Right. I don't mind. Like, I think we're, let's see. I don't want to really like panic or any of that. I just want to like sort of develop the mentality, because the first time I was doing this, I was so anxious, bro. I was so anxious. I was like, oh hell no, I'm not trying to speed this trade. I see the thing going like a little lower. I'm like, oh my god, I'm losing money. It's not even like actual money, it's just a funded challenge. So, but I'm like, oh my god, I'm losing money. So I'm trying to develop the whole mentality of just holding rather than just like backing out every single time. Because backing out was like the worst thing, because then I see another like opportunity and I'm like, oh my god, I'm gonna miss out if the FOMO starts kicking in. So it's okay, let's hold this. Even if we hit the stop loss, that's fine, we learn. You gotta take it to learn, man. Probably gonna blow this account low-key. It's okay, it's okay. Per buy limit, yeah, right here. On this it says 523, but on this it says 507 for some reason. 508. Right here, this point. This exact point. So now it's triggered in. There we go. Should I be trading during orange news? Low key? I don't know. Let's see. Uh-oh. Then I'll back out of this trade, low key. Probably close break even if I can. Because this is not the type of momentum that I want to see. Okay? It's a lot of selling pressure. Maybe it's because of news, I don't know, but push higher once more. Come on, push higher. Okay, I'll just close it here. Because this momentum is not convincing whatsoever. I'm not trying to take no trades off this candle. It's so indecisive. It's probably because of the news. Yeah, it's probably because of the news. This is so indecisive. I mean, it bricked into the fair value gap, so now it's mitigated at this point, so there's no... I think I'll just like sit out for today. Let's see how it plays out. Let's see if my delusional little stop loss, I mean take profit, will actually get hit. Let's see. This is on a paper trade. Let's see if I don't know, it might hit. I don't know. But usually you're supposed to take out like the lows and the highs during different sessions, right? So if this took out the high, then this takes out the low, then this is supposed to again take out the high, isn't it? Like the New York. But go lower? Why? Any specific reason? It's swept liquidity. I mean, we swept liquidity here, but oh my god, my thing looks like a mess. I gotta get rid of this. This is already a mitigated fair value gap. Why do I have that on my chart? Let me get rid of this OT. Because we swept liquidity here. And we swept liquidity once again. Okay. Yeah, it seems like we're going lower. Because this was unmitigated until like, not this. This was unmitigated until this point, so it seems like we're going lower from this. I don't know, because we swept this liquidity, right? So of course we should go lower, but I was expecting price to like sweep this, use this as support, and then go higher. That's what I was expecting, but it's okay. I feel like at some point it might even like reversal. If it doesn't use this, because this swept this liquidity, you see over here, and then we pushed, we have this distribution leg. So if it goes back, yeah, this level is where I would like generally cancel this. Got SMC, I think, because it's I think because first it mitigated 15-minute order block, now it gave retest, it first go lower. Right. So see, I think because first it mitigated 15-minute order block. Right. Which 15-minute order block are you talking about, by the way? Because I'm like very bad at identifying like proper order blocks. This one is. This one, are you talking about this? Like the. I'm still like very lost with the whole order block topic for some reason. I didn't like properly study this.
Price must take out and sweep the liquidity above or...
Because this did technically sweep liquidity over here. See? So I think this is an order block, isn't it? This candle. This is retesting this level. What's going on here? The one thing that I don't understand still is order blocks.
or below the previous candle to form a valid order block.
Yeah, so it needs to sweep liquidity and
Secondly,
then go.
price must leave inefficiency behind and generate imbalance near the order block area. If there is no proper imbalance between the subsequent candles, then the identified order block cannot be considered valid.
Okay.
Rule number 3, it must be unmitigated. Order blocks are considered one-time use, meaning we focus on the trading opportunity when price first enters an order block. Once an order block has been mitigated, we do not consider it as an area of interest for future trading.
I 433 level is where I want 15-minute quick espresso. Maybe not trading view. 433. 433. Oh, this one. Where 15-minute week espresso. Yeah. You mean this whole candle is an order block, isn't it? Because it uses this level as like, yeah, we hit stop loss. Yeah, it's going lower. I think at some point it should. I want to see like let's see if we can like long this at least, like after sweeping liquidity here. Because I want like New York to take out the highs. Follow one, either ICT or OB. Otherwise you will always be confused. Isn't like OB part of ICT? I didn't go through like the mentorship specifically, but to my knowledge, like OBs are also part of like his. No, it mitigates 15-minute. Right. Mitigate. I need to like properly look into like old order blocks, bro. OB was created previously. Do you mean this? This one? Because this wicks right through, right? So I don't know. Yeah, I need to study order blocks properly.
Rule number 4. It emphasizes that a high-quality order block must
ICT or SMC. We was created.
lead to a break of structure.
You need to follow one, either ICT or SMC. Wait, I prefer using like ICT, but like, isn't like order blocks also part of like ICT?
Structure or a change of character in the market. Break of structure and change of character are essential signals that indicate whether the market will continue in its initial direction or will experience a reversal. To solidify our understanding of order
But I think right, because it swept this liquidity. No, I think it's still, we'll hold this for a while until it properly like sweeps liquidity and then go higher from here. I want to see like a 15-minute fair value gap if we're going higher. Let's see.
order blocks. Let's examine.
Change of character. Yep. Interterm high broken. Let's use this as a support level.
More examples. Consider a series of bullish candles as illustrated. As you can see, the market momentum was bearish until the price created this weak bullish candle just before.
Yeah, it swept this liquidity. We have fair value gap. Everything is same, but due to different terms, sometimes. Right.
Starting to push upward with these 3 large green candles. This weak bullish candle reached its lowest point here, and additionally, it took out and effectively swept the liquidity below the previous candle. As mentioned earlier, without a proper imbalance in the subsequent candles that form after the order block, our identified order block cannot be considered valid. If we look at this 3-candle sequence, we see that the upper wick of the first candle and the lower wick of the third candle do not overlap the whole body of the middle candle. Here we have a gap between the candles, representing the imbalance. Since the criteria for a valid order block are met here, this candle represents a valid order block.
Right, okay.
If we look a bit higher, we see that once again, the price has created an upward drastic movement. This red candle represents the last bit.
Swept this liquidity. We still have a fair value gap, so this should also be valid. Now after mitigating 15-minute order block, then after creating 1-minute change of character and break of structure, it will retest 1-minute order block and go higher. Then after creating 1-minute change of character and break of structure, we'll retest the 1-minute order block and go higher. Interesting. Mitigating 15-minute order block and then creating 1-minute change of character, yeah. Break of structure for retest. So you're basically saying, wait, in that scenario, oh yeah, okay. So you're basically saying like after a market structure shift and a break of structure, we retest the 1-minute order block and go higher. I don't really use 1 minute from where you took the trade. There was inducement, that's why why it has already took liquidity. Right. I took this from here, like right here. Because I was expecting price because it swept this liquidity, right? This manipulation like. So I was expecting this to like sort of retest this price level and then like go higher from there towards these highs. Maybe a little higher and then, you know.
Bearish candle that had just been formed before the price started to push drastically to the upside. We can see that
Swap
this
liquidity.
bear
I often wait for you to come live because I like talking. Oh man. Because I also just started trading some time ago and also learned from you and what was it? We discussed exactly. Yeah, I appreciate you tuning in, man. Because I learned a lot from you as well, so this is manipulation, isn't it? Like this one. So if we see proper, like, I don't know, let's see. Also trying to like understand what's going on here. Because if we can use this level as like a retest, then we can sort of take this towards this upper. Because we need to sort of retest this level, then go towards the we swept this liquidity, so maybe? I don't know. Because this has to be a distribution like afterwards. But the price action is not convincing whatsoever. This is probably because of news, honestly. I don't know what's happening with news, but I think we should honestly stay away from like any news events. It's orange news folder, but you know, might be a little bit of a. Because I feel like this should have gone higher, right? From this fair value gap. Because it was overall on like a bullish structure as well. We weren't even in like premium to even like see that much of a reaction. See, we were like below premium. According to SMC, if we are using 15-minute order block, then we will enter on. If we are using 15-minute order block, then we will enter on. Oh, enter on 15-minute, 1 minute of 4 hour, or 4 hour, then 15-minute. Okay. My chat's like caught up. Yeah, I couldn't see what this is. Okay, according to SMC, if we're using 15-minute order block, then we will enter on the 1 minute, or 4 hour, then 15 minute, or 1 hour, then 5 minutes. Right, I use the 4 hour, then 15-minute thing. This will come after 14 minutes. It does nothing really. Because I'm like, I thought it was like the news folder unfolding, but generally, like from what I know, it's like the red folder news that has a huge impact. But how do you know like when the news unfolds? By the way, news will come after 14 minutes. Like, how do you know like?
bearish candle has taken out and effectively swept the liquidity.
Right. Yeah. So this is
Below
okay.
the previous bearish candle. Since the price has also
This is
created a proper
valid.
gap between these three sequential candles, meeting all the criteria for identifying a valid order block, we can now consider this candle as a valid order block with the potential to reverse the price if it pulls back down and mitigates it. As you can see, this bearish candle here is the last bearish candle before the price formed another bullish movement. However, this candle does not represent a valid order block because it did not take out the previous candle's low. Let's examine more.
15 minute to 1 minute, forward to 15 minute, and then 1 hour to 5 minutes. Wait, so you go through each and every one of those time frames? Because I only do like 1 day, sometimes 1 week, 1 week bias, one day, and then 1 day. Usually I look for like manipulations and liquid sweep manipulation. Time is written along the folder. Oh wait, really? Where? Because this is like the time it starts, right? Let me see. Where? I don't see the time. Oh no, it doesn't show the time. I use 15 minutes. Right, okay. So doesn't show the time here. It says like this is my local time, like my check 15 minute For 1 hour bias. Right. I use 4 hour as like 4 hour PD arrays, but
examples. Consider another series of candles, as illustrated in the second diagram. Once again, we see that the price has taken the low of the previous candle.
yeah, so this is swept it swept this high, then it didn't look close over, but this right here seems like it's sweeping liquidity, but wait, what? No. Yeah, this swept liquidity, but then this is a
Effectively
valid?
sweeping liquidity below it with this bearish inverted hammer candle.
Right.
Thus, we have a potential candidate for a valid order block. However, there is no noticeable imbalance among these three candles, and the
Oh yeah, that's right.
order block is mitigated by the upper wick of the bullish candle. Consequently, this order block cannot be considered valid, as it fails to meet most of the necessary criteria for validating an order block. Therefore, it cannot be utilized as a demand zone. When faced with scenarios like this, where the price has taken out the liquidity from the previous candle, but the order block is mitigated, or when the price fails to create inefficiency, we designate the subsequent candlestick as the valid order block. In this case, we identify this bullish candle as the valid order block instead of the previous selling candle. This decision is based on the fact that the price has generated a proper inefficiency or imbalance immediately following the bullish candle. If we look slightly higher, we notice that the price has taken the low of the previous candle, effectively sweeping liquidity.
Isn't this breakaway gap sometimes like used as a potential point of interest for entries? If like if price doesn't really pull back towards your fair value gap, this breakaway gap that forms right here. This is like the top wick of the fair value gap, or vice versa in a bear scenario.
Below it with this bullish
That's something that I've noticed like a few times now. Like you use this breakaway gap if you don't like, if price doesn't come back to your fair value gap, because you don't want to like miss the trade either, because it might be like a good trade. I don't know. That's like something that I'm trying to double check and confirm, I guess.
candle before the price starts to push significantly higher. However, there is no discernible imbalance.
This
And this order
takes.
block is-
Oh wait, okay. So this is in fact valid. Yeah. Swept this liquidity. We have this fair value gap. Taps back into it. Boom.
Mitigated
Wait.
by the upper candle's wick.
Oh, it should be unmitigated. Okay, so it needs to be, where is it? See, it needs to be an unmitigated FVG. Mitigated. Yeah, if you, at your local time, news will be released, and if the news time back, we will see high impact within 3 to 5 minutes after news. Really? So it's also called point interest. Right. This, so from what I can see, this is a sweep. It's a fair value gap, but then it's wicked into, so that's why it's so if it's mitigated, if it's a mitigated fair value gap, then it's an invalid order block. That's interesting. I want to make sure like this is I usually put this on my friends' DMs. Do that.
Therefore, this order block cannot be regarded as valid and consequently cannot be utilized as a demand area.
We use we use FVG if there are 2 order blocks present and there's an FVG between both of them. Then we will use FVG. Right. We use FVG if there's an order block present and there is FVG between both of them. Right. So you mean like there's an order block and there's a fair value gap between 2 order blocks? What do you mean? Like, I didn't really get that.
Continuing, once again we see that the price has pushed significantly to the upside. This red candle represents the latest bearish candle that has just formed before the price started to push dramatically higher.
Okay.
It is evident that this bearish candle has surpassed and effectively swept the liquidity below the previous
Right. So then this is a valid order block.
bullish candle. As the price has also created a proper gap between these 3 sequential candles, and there is no mitigation, all the criteria for identifying a valid order block have been
Okay.
met. Consequently, we can now regard this candle as a valid order block. These concepts are applicable to bearish markets as well. It's important to note that these principles can be applied across various timeframes and any price action-based chart. Now let's proceed to the real chart and integrate all the concepts we've explored in this video. We'll examine how to effectively identify valid order blocks in the market. So here we have Eurodollar 15-minute timeframe chart on the screen. As you can see, the market's overall direction is in an uptrend. Upon analyzing the chart, we notice that the price has established a bullish break of structure by breaking and closing above this major high. With the emergence of the break of structure, our focus should now shift to identifying order blocks associated with the BOS. This white candle at the extreme represents the last bearish candle that has recently formed before the price began a significant upward push. It has successfully taken out and swept the liquidity below the previous candle.
Right, so it needs a sweep, okay.
However, upon closer look, if we highlight this candle, it becomes apparent that this order block is mitigated by the
Right, so it's also mitigated over here. So basically, let's look at it like this. So right here, we see a fair value gap, which is already wicked into, which is basically invalidated this, right? And then this is basically, this has swept liquidity over here. And then that's why this sweep, or manipulation in other words, and then distribution, during the distribution leg, right? D, distribution. And then this is the fair value gap, it taps back into it. So this wicks into it. And that's why this is completely invalid. This is an invalid order block. So let me just say invalid order block. Oops. Invalid order block. There we go.
upper tiny wick. Therefore, we cannot consider it a valid order block. Looking slightly higher, we notice another bearish candle that represents the last one before the
It swept liquidity.
price began a significant upward push. It's clear that this candle has taken out the low of the previous candle. Upon highlighting it, we see that it is mitigated by the upper wick of the bullish candle. As mentioned
Right, okay.
earlier, if our identified order block is mitigated by the last candle of the 3 sequence candles, we should consider the next candlestick as the valid order block. Therefore, this candle serves as our valid order block.
Okay, so we have this.
Let's continue. In the following
What? Okay, so if you don't have a fair value gap, you use this as your order block? Wait, let me...
mitigated by the upper wick push. It's clear that this candle has taken out the low of the previous candle.
So it
Upon
swept the liquidity.
we see that it is mitigated by the upper wick of the bullish candle. As mentioned earlier, if our identified order block is mitigated by the last candle of the 3 sequence candles, we should consider the next candlestick as the valid order block. Therefore, this candle serves as our
Right, okay, so in this type of situation, so if we have the liquidity swap, okay, over here, manipulation, and then once we have this wick, which is wicked into this this candle right here, that means this is the order block. That's what I got out of that. I didn't fully understand that. I need sort of rewind. There are two ways of taking an entry. Either we find order block small OB, or we use fib and then take a entry at 618 and put a stop loss at swing low. Right. There are two ways of taking entry. Either we find order block of small OB, or we use Fibonacci and take an entry at 66.618, put stop loss at swing low. Right. Because the candle below hasn't created any FVG, we need a order block candle to create FVG. Right, okay, because the candle below hasn't created any FVG, we need a order block candle to create FVG. Order block candle to create FVG, what do you mean? Like this type of situation? Like where we have this liquidity swap, this is the fair value gap, it's invalid because this is wicked into. Wait, if in this scenario, according to this video, right, isn't this candle supposed to be like the order block? So swept liquidity, but the wick smaller time frame. Right, wait. But the wick is, I think you have my WhatsApp number, right? Could you cause right now I don't get it in hindsight, but swept liquidity, but the wick is but candle has been wicked into, therefore makes the next candle the order block. Seems to be parallel as well. I need to ask someone about this specifically. I don't really understand what this is about, because it wicks into this order block. Of course, it sweeps liquidity. It wicks into this, and then we see this as used as like a demand zone. We will consider that candle order block if it has created any fair value gap in the next two candles. Oh, right. So it's basically we're in the next two candles. You mean like over here? It has a fair value gap here, like at this point. So if we're considering this as the if we had to consider this in this scenario as an order block, because there's a fair value gap here, is that what you're saying?
or valid order block. Let's continue. In the following sequence, we see that the price has initiated another upward movement, and this
Yeah, swept
candle is
liquidity.
the last bearish one before the upward push. It has taken out the low of the previous candle.
Alright, okay.
However, upon
Stop watching other videos, and next videos you will explain further. This is basic or... Okay.
highlighting it, we see mitigation with the wick of the third candle,
Right, so it mitigates this.
mirroring a scenario we discussed earlier. Consequently, we identify the next candlestick as the order block. Yet again, it is mitigated, this time by the upper candle's wick. Therefore,
Right, okay.
we proceed to the next candlestick. Traders, the red hammer that follows is our valid order block.
Oh, okay. So it basically keeps going until it finds a unmitigated order block. Because this one was wicked into, right? The body was wicked into. This one, the body is not really wicked into. Like if it wicks through, basically. If it wicks through, then it's like invalid. But then if it doesn't really wick through, then it's not invalid. So that's why it's used as a order block. Sort of retest price again as a demand zone. So I gotta make sure I go through this today. Sorry.
Nevertheless, upon closer look, we know that the price touched it, and after a minor reaction, pushed to the downside without respecting the order block. The primary reason for such price action is that we should always wait for the price to take out the inducement before executing a buy or sell position. This topic has been covered in our earlier episodes. I highly recommend that you go through our channel and watch them for a more comprehensive understanding. Continuing, we see that the price continued its downward momentum, pulled into our valid order block, experienced a reversal, and subsequently pushed higher. If we were analyzing a live chart, this order block would present a great opportunity for us to execute a long position and enter the market. In the continue, we see that the price has formed a change of character pattern by breaking and closing the structure. After the emergence of the change of character, it is crucial to wait for the price to take out the inducement before.
This is a 1-2 fair value area, right? Because from what I know, this is called a fair value area if you have a 1, 2, 3, in other words a swing, right? So 1, 2, this, we could consider this as a 3, but you see this first line is sort of used as a support level. So this is basically like, you know, it's basically a breaker market structure shift, but like this can be considered as like a fair value area. So technically, if you have fair value area, it's like confirmation, added confirmation that the market's going to continue sort of using this as like a level of support, I guess. So you can like sort of, if it pulls back towards like a fair value gap that's inside this, then you can like sort of use this to go higher from type of thing.
For considering long or short trades and entering the market. In this case, this candle's low represents the most recent internal level that the price has formed in its upward path. So once the market has taken out the inducement, the next step is to wait for the price to mitigate our identified valid order block. In this scenario, this white candle represents the last bearish candle that formed just before the price pushed drastically to the upside.
Swept liquidity, it's not wicked into.
Sweeping the liquidity below the previous candle's low. Additionally, there's a noticeable
Fair value gap's not wicked into.
imbalance above it. Hence, this candle is our valid order block, offering a high probability if the price mitigates it. If the price taps into it, we should consider entering the market with a long position. But before we continue, it's important to note a crucial step in your trading journey: backtesting your strategies. Before applying any strategy to your real account, it's recommended that you backtest it at least 100 times. To help you with this critical step, we use the Trader Edge.
Okay.
Now, in the following sec, thoroughly cover the major strategies. If you're interested in using Trader Edge as your backtesting tool, be sure to check out the link in the description below. Traders, we have thoroughly covered the major order blocks that frequently appear on real price charts, enabling us to develop a solid understanding of how to identify them. Now, in the following section, we will explore the entry models that can be incorporated into our trading plans.
Okay, I gotta go. See you tomorrow. See you, man. Thanks so much for coming by. If you could like just send me like the stuff on WhatsApp as well, I think I'd really appreciate that. I think you have my number. Goodbye. Have fun, bro. Thank you. You too, man. Take care.
Using order blocks. These entry models will serve as effective tools for executing trades based on the insights gained from order block analysis. There are 4 primary types of entries that we can employ when executing trades using order blocks. The selection of a specific entry type depends on various market factors, such as the market's movement, sessions, volatility, and other relevant factors. By considering these factors, we can choose the most suitable entry type for executing trades effectively. The first entry method involves using the wicks to execute trades. In this type of entry, after identifying...
Thank you, man. Take care. You too, man. Have a nice day, man. I don't know what time it is for you, but see you, man. Bye bye. So yeah, this is manipulation right here, and then we have the fair value gap. Have your number, don't worry. Okay, thanks, man. So this is the manipulation right here, and the fair value gap. This is not wicked into, so it's a valid order block.
A valid order block, we place our buy-or-sell order directly on the wick. In the case of a sell position, we will place our stop loss a spread size above the higher wick of the order block. This entry setup provides a wider stop loss margin, which can directly impact the reward-to-risk ratio by reducing it. However, using this type of entry increases the probability of your order being triggered, since price may simply touch the wick and then push to your expected direction. The second entry type is referred to as the body entry. In this approach, once a valid order block is identified, the entry is placed based on the body of the candle. For sell positions, the stop loss is set a spread size above the higher wick of the order block. This entry method typically offers a higher reward-to-risk ratio compared to the previous entry type, because the stop loss is tighter. This approach carries a slightly higher level of risk.
Right, okay.
Typified, the entry is placed based on the body of the candle. For sell positions, the stop loss is set a spread size above the higher wick of the order block. This entry method typically offers a higher reward-to-risk ratio compared to the previous entry type, because the stop loss is tighter. This
I don't think I would go for that.
approach carries a slightly higher level of risk. Irrelevant factors. Trades. In this type of entry, after identifying a valid order block, we place our buy or sell order directly on the wick. In the case of a sell position, we will place our stop loss a spread size above the higher wick of the order block. This entry setup provides a wider stop loss margin, which can directly impact the reward to risk ratio by reducing it. However, using this type of entry increases the probability of your order being triggered since price may simply touch the wick and then push to your expected direction.
Hmm.
The second entry type is referred to as the body entry. In this approach, once a valid order block is identified, the entry is placed based on the body of the candle. For sell positions, the stop
So there's a body entry and there is a wick entry. So basically, you could either entry of this, or you could even entry of the wick. I'll just say wick E. Right. So basically entry of the wick. Ideally, honestly, I would wait for this fair value gap to be like validated. I wouldn't entry of this. Because price will in fact tap back into this zone. This is going to be my stop loss, SL. So, and then we're going to tap back into this and then go lower. Okay.
stop loss is set a spread size above the higher wick of the order block. This entry method typically offers a higher reward to risk ratio compared to the previous entry type. Because the stop
Sweeps liquidity once again, and then
loss is tighter. This approach carries a slightly higher level of risk.
let's look at this. So it swept liquidity once again, and then probably uses like a fair value gap, taps, goes, and then goes here. Uses this order block as a, level of interest, goes lower from there.
The price may only touch the wick of the order block and then move in the anticipated direction without triggering your buy or sell order. Consequently, there is a chance of missing out on a potentially profitable trade opportunity. Let's move to the next entry type. The third type of entry, which I personally prefer and utilize more frequently in my trading plan, involves placing the entry at the midpoint of the order block zone once a valid order block is identified. In the case of a bearish scenario, the stop loss is positioned a spread size above the highest point of the order block. This entry type offers a reward to risk ratio that is at least twice as large as the regular entry types mentioned. This is due to the refined entry point and the
50%. Okay. So it's basically using 50% as my 50% entry. This is the entry point, and because it's not off the wick, neither is it off the body, so it's off the 50% encroachment. That's also pretty good entry because it taps back into the 50% range and then goes lower. It's not that bad.
smaller size of the stop loss. This is precisely why this entry type holds a special place as my favorite approach. By employing this approach, we can potentially enhance the profitability of our trades while effectively managing risk. The fourth entry type involves placing the entry based on the body of the candle once a valid order block is identified. In sell positions, the stop loss is set to touch the higher wick of the order block. This entry type is undoubtedly riskier because the stop loss is positioned within the order block zone. If the price intends to fully reverse the order block, it may trigger the stop loss. It's important to be aware of the increased risk associated with this entry type and carefully consider its suitability within your trading strategy. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on
Hello traders, welcome to the Smart Risk. Usually, we place our orders at important levels in the chart. We buy in the demand zone and sell in the supply zone. But what if these demand and supply zones are not important enough to place a trade? Probably we will end up losing if we execute a trade on them. So identifying important levels in the market is vital. In this episode, we will cover one of the most powerful demand and supply zones called order blocks. We will show you how to draw order block zones in the chart, along with the rules to identify valid order blocks. Let's get started. So what is an order block? Order blocks are the optimized areas of supply and demand. Order blocks form when central banks or large financial institutions accumulate large quantities of a particular asset through big orders, resulting in a massive price move. In other words, they form when there is an imbalance between the buyers and sellers in the market. And why are order blocks important? Because whenever the price reaches them, we can expect the price to show a significant reaction to them.
Let's see. Which one are order blocks, right? This is an order block because this wasn't wicked into until this point. So that's why this is valid. This is not an order block. Wait, there might be a little bit of a gap. But how is this really an order block? Because there's no real gap here, right? So technically we can consider this one, isn't it? Oh wait, no, we don't really sweep liquidity here. I need to look into this properly. Sweep liquidity right here. And then we have, we don't really have a fair value gap here. So we can use this one because there's a fair value gap here. But this wicks directly through, right? No, we don't really wick through, no. I properly studied this. We have this fair value gap. And what do we have here? This manipulation. But then we don't really have a sweep here. Wait, we do have a sweep. Bit of a sweep. Goes higher. We have the sweep here. And then this one, we have the fair value gap. Taps back into this. technical store. Let's see.
In the bullish scenario, the last bearish candlestick before starting a drastic bull.
I mean, technically it's sweeping liquidity and fair value gap. If this is met, then it's a level of, it's an order block, isn't it? Wait, let me see if I can spot this. Oops, my bad. So let's see. Nope, not this one. For sure, not this one. Because we swept liquidity, but we don't really have any spaces. This still wicked into. This is still wicked into. Is this a level? No, I gotta go through this properly on my own, like.
Bullish move will be identified as the order block zone,
Right.
or the first weak bullish candlestick before the start of a drastic bullish move. The same thing applies to the bearish scenario. So let's look at these examples and see if we can identify the order blocks. Here we have a heavy bullish uptrend, and you can quickly point out the drastic moves caused by the market imbalance between the buyers and sellers. Look and see if you can spot the order block zones by definition. The last bearish candlestick before starting a heavy bullish move, or the first weak bullish candlestick. Here we see a bearish candle before a big move, so we point it out.
Swept liquidity, fair value gap. So it's just, yeah, this is where it.
Here we have a weak bullish candle before a big move, so again we highlight it.
No, this is not really an order block, isn't it? But this low-key could be used as another level of order block.
Again, a bearish candle before a big bullish move, and the rest just like the others. Keep in mind that whenever the shadow of a candlestick is bigger than the rest of it, we take the shadow as the zone of our order block. So far,
Whatever, really? I don't think it's the bottom, is it?
you have a vision of order blocks, but here is the key point. Order blocks must meet 4 rules to work effectively, and those rules are having imbalance, break of structure, inefficiency, and being unmitigated. We have already discussed the imbalance. Let's talk about the other rules. Breaking of a structure. Take a look at this example. Here the price made a move to the downside, made structural level and had a pullback on the way down. We can notice this move with imbalance, but we can't identify this level as an order block because the price never broke below the structure. So for having an order block, price must break through the structure. Rule number 3. Inefficiency. Take a look at this example. If I only draw the body of candles, we have the same heavy bullish move to the upside. But see if you can notice the difference when I add the shadows.
Yep.
In the first case, the price went up to this level, and then pulled back here, and gathered all of the orders that have been waiting for a pullback. So if we identify this level as an order block, and expect the price to react to this level, it will have minor chance to work, because there exist no orders, since all of them have been gathered before. But look at the other scenario. It's that have been waiting for a pullback. So if we identify this level, the price went up to this level, and then pulled back here, and gathered all of the orders that have been waiting for a pullback. So if we identify this level as an order block, and expect the price to react to this level, it will have minor chance to work, because there exist no orders, since all of them have been gathered before. But look at the other scenario. If someone were waiting for a pullback, they would have missed this trade, so on the way back, everyone is waiting to place orders in the demand zone. This is the concept of inefficiency. Let's talk about the last rule, which is so simple. The order block must be unmitigated. Order blocks are one-time use, so if the price has reacted to an order block before, we won't consider placing a trade on it.
Okay, yeah, I mean, just like fair value gaps. So basically, order blocks are just like fair value gaps. They're already mitigated into, then we will not use them again. The whole concept of mitigated PD arrays. See? Also known as reclaimed order blocks. So basically these are reclaimed order blocks. An order block that's already wicked into, or that's wicked into, is known as a reclaimed order block. That's kind of common sense.
Therefore, the order block must be unmitigated. So that's it, traders. Thanks for watching. Please support us by like and subscribe, and comment down below if you have any questions. See you.
Hey guys, and welcome to another episode. Order blocks are considered interesting areas to execute trading opportunities. But do you know why some of the order blocks work perfectly fine, while others get ignored by the market? To answer this question, we backtested more than 100 order blocks under different conditions to find out the characteristics of high-quality order blocks that are being respected by the market. We applied multiple rules to see if they really increase the win rate of order blocks, and gathered some of the most interesting results. We concluded that order blocks work under certain conditions, when some repetitive patterns happen in the market. So in this video, first we will explain the basic rules in a simple setup. So first, let me explain some of the primary rules about order blocks and the smart money concepts. Basically, we consider the last candle that created the inefficiency as the order block zone, which we believe that the decisions are made during this candle. Sometimes order blocks are at the start of an impulsive move, and sometimes in the middle of the movement in the form of a candle with the same or opposite color. We have order blocks are at the start of an impulsive move, and sometimes in the middle of the movement in the form of a candle with the same or opposite color.
What?
We have three major rules for identifying a valid order block. First, it must create inefficiency. Inefficiency occurs when we have drastic moves that create gaps between the shadows. These are examples of efficient and inefficient moves. Second, it must lead to a when we have drastic moves that create gaps between the shadows. These are examples of efficient and inefficient moves. Second, it must lead to a break of the structure or a change of character. A break of structure or change of character is the first clue that the market is telling us whether it intends to continue in the same direction or reverse. Third, a break of structure. These are examples of efficient and inefficient moves. Second, it must lead to a break of the structure or a change of character. A break of structure or change of character is the first clue that the market is telling us whether it intends to continue in the same direction or reverse. Third, it must be unmitigated. Order blocks are one-time use, so we only look for trading opportunities when the first time price taps into an order block. Here on the Euro-Dollars 15-minute chart. Let's spot the order blocks. Starting from the left, these are the areas where we have clear inefficiency on the chart. So we mark the candles that created the inefficiency.
Yeah, see? This right here swept this liquidity, and then taps back fair value gap, boom.
As our order blocks.
And then it swept liquidity, taps fair value gap, taps back, goes.
If they lead to a break of structure or change of character. So all of them consider valid order blocks according to our rules. Now, let me explain the steps of the trading strategy we used for the backtesting order blocks. The rules for this trading setup are easy. Identify a valid order block, place your order at the beginning of the order block zone, and put your stop loss at the end. We target 2 times our stop loss range for the profits. This way, even with a 34% win rate, we will still be at break-even. We have backtested this trading setup 100 times on euro-dollar pair in the 1-hour time frame. For the backtesting, we use Trader Edge software, which allows us to save so much time while Now let me show you we set our initial account size at $10,000 with 2% risk, targeting 4% profits. Now let me show you the results we've got. These are the 100 order blocks we have spotted on the chart. The green order blocks you see are the trades that hit our 1 to 2 target and ended up winning. The results we've got. These are the 100 order blocks we have spotted on the chart. The green order blocks you see are the trades that hit our 1 to 2 target and ended up winning. The red order blocks are the trades that ended up losing, and the gray order blocks are the ones the market did not trigger. And finally, we canceled the trades. So these are the backtesting results we have got. From 100 order block setup, 28 did not trigger, 41 ended up being a losing trade, and we have won 31 setups. Our win rate was 43%, and we suffered a 10% maximum drawdown. Although our win rate was less than 50%, this trading setup raised our initial account size by 47%. In the backtesting, we have realized that when certain conditions accompany order blocks, the chance of winning the trade significantly improves. We also noticed repetitive patterns form on the chart that dramatically increases trading returns. So let me explain to you what conditions are required to identify a high-quality order block. But before we continue, as always, please smash the like button to show your support, since this video took a long time to make for our team. Also, 4 categories, including market structure, since we do our best to answer them all. But since this video took a long time to make for our team. Also, if you have any questions, please ask them in the comments, since we do our best to answer them all. The factors that should be considered when trading order blocks are summarized in 4 categories, including market structure, market volatility and spread, market trends and recent order blocks, confirmations and lower time frames. Let's start with the market structure. Let me show you some of the most common market structure patterns that happen every day. Here we have a valid order block and a potential trading opportunity to go long. But looking at the left side, we can spot this gap between the candles, precisely below the first order block, and another valid order block zone here. Now, there's a high chance for the price to come and fill the gap. Grab the liquidity below the first order block and continue pushing up when it taps into the second order block.
Interesting. Because it needs to rebalance this fair value gap in the first place. Interesting. I gotta study this fully by tonight.
So when this pattern is formed, and we have a gap and another valid order block precisely under the first one, we give the first order block -1 point for trading. Also, remember that breaking below the first order block does not necessarily mean a reversal is coming, since there's a high chance that this break is just a liquidity grab for future movement.
Yeah, just a sweep.
On the contrary, look at the second pattern. Here we have a valid order block, and looking at the left, we can see that this move has swept the liquidity under these equal lows, which can fuel future movements. So when this pattern is formed, and we have an order block that grabs the liquidity under or above the equal lows and highs, we give it a +1 point for trading. The third pattern is similar to the second one. Imagine we have an order block in front of the market. As the price approaches this level, it creates support, which retail traders put their stop loss under them. Hence, there's a higher chance for the price to grab the liquidity under the equal low.
People say retail traders with their stop loss.
As the price approaches this level,
Every single time some shit's going wrong with retail traders.
Which retail traders put their stop loss under them. Hence, there's
like a meme at this point.
a higher chance for the price to grab the liquidity under the equal lows and continue
See? Yeah, it's just a liquidity grab.
moving to the upside when it reaches the order block zone. So let me show you some real chart examples to highlight the point. Here we have euro-dollar in a 1-hour time frame. We can spot this valid order block that created inefficiency and break of structure. But looking at the left side, we can spot the support that rejected the price multiple times. So there is a lot of liquidity
Yikes, yeah.
gathered below this level. Also, we have gaps exactly under this zone and another valid order block. So there is a high chance for the price to break below this liquidity zone
Sweeps this
to fill the gap
and then goes.
and continue pushing up when it taps into the second order block.
Yep, interesting. I'm getting a migraine. I think I'm gonna end stream.
Here's another example. You could have
try to sort of digest this and then come back maybe tonight. I don't know.